Let's start off here with Derrick. Derrick, you're with Allworth Money Matters.
Yes. Hi, Scott and Pat. Thank you very much for taking my call.
Yeah.
So, my question has to do with how my 87-year-old mom should invest her assets. Let me give you a few details. So, my dad passed away a couple years ago, and my mom decided to continue living in the house independently until recently. She is in good health, but has taken a couple falls recently, and so now it's just time for her to move in with my sister, and she's there now with my sister. So she just sold her house for $800,000, and in addition to the proceeds from the house, she has about $200,000 in CD and high interest savings, which she's been living off for the past couple years. And she spends roughly 40 to 50, maybe 50,000 at the high end per year.
Is this?
She's got no debt.
How does she? As she's living with your sister, how is she spending that much money?
Well, that's what she has been spending over the past couple of years.
Okay.
Yeah, it may be a little less now, but still, she gives to charity, and I think for planning purposes, I would think I'd rather be conservative.
Okay.
Go from past.
Derrick, how many siblings are there? It's you, your sister, and
there's 6 of us.
Oh, 6. Yeah. Okay.
And a whole bunch of grandkids too, about 30 grandkids, and so because of that, right? That she's a generous woman. She's got a big heart, lots of grandkids. $1 million seems like a lot of money, but that's her entire net worth. So really, I want to make sure that we help her with ensuring that lasts her for the rest of her life. Her dad died in his 50s, but her mom lived to over 100. So,
and what income does she have coming in now?
Well, now really the only income she has coming in is from the $200K in the CD and high interest savings. The proceeds from the house, which was just a couple of weeks ago.
No Social Security?
She does get just a little bit in Social Security, but it's just like $300 or $400 a month.
Okay.
And no survivor pension or anything like that?
That's correct, right.
And how's it?
My dad was sorry, go ahead.
Oh, no, your dad was
He was a teacher, and so didn't have accrue Social Security, and the pension was
wait.
Yeah.
There was that change that occurred last year.
They got rid of it got rid of the income.
The Windfall Elimination Provision.
Yes.
She may be entitled to more Social Security.
Oh, okay.
I would most certainly.
Because her Social Security, did she work outside the home?
She did not.
So her Social Security was dependent upon her husband's Social Security, and based on that, her husband would have been eligible for increased benefits because of the legislation that was changed last year. The husband we know would have.
Yeah, the windfall, well, then she would have as well as a survivor.
Well, I don't know that for certain, but that would lead me to I would bet on it. I would bet on it that she actually has significant more Social Security income coming to her because of the change with the elimination of the Windfall Elimination Provision.
Yeah.
So you want to reach out to Social Security Administration.
Do a little research online and learn about it a bit.
I think that'd be hard to find.
Yeah, would that be the case? Even though I don't believe my dad was. I'm sure that Social Security was not being withheld from his.
That's correct. That's correct.
His teaching.
That's correct.
But he had 40 quarters from somewhere,
or your mother wouldn't be receiving it. So it was a change. The Windfall Elimination Provision actually didn't pay that as much of a benefit because they were receiving a teacher's pension.
Yeah, they said you can't double dip.
But then that was repealed last year. Was it last year?
Yeah,
last year.
Last year in the one big beautiful bill.
Yeah.
Okay. Well, thank you. Yeah, I will do.
Yeah,
some
I
research on
would.
that.
That's the first place I would look for increased income.
But that's one thing. So, what are your
Great.
thoughts on how to? At first, did your dad manage the finances before?
He did. Yes.
And was it always in bank CDs?
Let's see. So actually, there was a life insurance policy, but not for much. I think it was whole life or something like that. It was for like $100,000.
Okay.
And so they really didn't have investments. It was just his pension that they were living off of.
Who did your mom ask you to help with the finances amongst the 6 siblings? Like, how are you the designated one? Okay.
She asked.
Yeah. She did. Yeah. I've been helping her the past couple of years, ever since my dad passed away.
And the other siblings are fine with this?
They are. Yes. Yes. No problems there.
Okay, good. What's your thought?
So what I did, I actually called you guys a couple of years ago, shortly after my dad passed away, and I invested. We put her money into a CD, and that's all, just the CD and the high interest savings. But that was only, I think it might have been $250,000.
That's right.
That's right.
Yeah,
That's right. It's different now. It's different now.
And so I didn't know if we should continue down that path, or anyway, that's why I'm calling you. And back then also she was under the FDIC limit. So
yeah, actually, she probably owns it in a trust, I assume.
That was another question. It's not at this point. They just created a trust, and my sister helped her with that. So we kind of have a distribution of responsibilities. She created the trust last year, but I'm sure that her $1 million in net worth is not in that trust. It was just a quick trust they created, and
well, you'll want to make sure that gets in there, otherwise it could be subject to probate. But do you know how the beneficiaries are? So when she passes away, how these dollars are going to get split up?
Yeah, it's just all the split up evenly among all the siblings.
And do the siblings get along?
We all do. Yeah.
Okay.
I guess that's
well. It matters. I mean, the reason it matters is there's got to be trust among you.
That's right.
And even if you don't get along, there can still be trust. It just makes it a little bit more difficult.
I mean, so if the plan is let's design this in case mom lives over 100, because you believe there's a reasonable possibility that will occur, then that's a certain kind of an investment strategy. But the risk tolerance isn't necessarily just your mother's. It could be all 6 siblings. And what I mean by that, let's say you decide, all right, we're going to keep half of this in very secure CDs, treasury bills, whatever. And then let's take half of it and invest in a portfolio consisting of some other growth type assets. Let's just say it was all stocks, just for argument's sake. And your sibling, everyone's all fine with it. And then we enter a bear market. And that $500,000 drops to $350 or $300. And you might be thinking, well, that's fine. I'm concerned. These dollars are for when mom's 97, not 87, so we can live through that. But the other siblings might be thinking differently about it. And therein lies this is the struggle here.
And the inverse is true, which means if you keep
the inverse is true.
And the inverse is true, which is if you say, oh, we need to keep this super conservative because we need to make sure mom has enough money forever, which she may or may not, but what the scenario you gave me, it looks like she does, then you might have some siblings that say, well, that's silly. You should have some growth assets in there. So there's a balance. And look, this is experience speaking from sitting with multiple grown children about their parents' portfolio.
And my own experiences with having loved ones pass away and dealing with siblings and my wife's siblings.
You're bragging that your parents had money?
It wasn't much. That's what the people are so upset about.
Yeah, I think she's very conservative, low tolerance for risk. So I think that's probably the best approach.
Okay. We didn't give an answer. We didn't give an answer,
no.
but that leads us someplace, which is how heavily is she involved in these decisions? How closely does she monitor them?
Not very closely. But she still does care. You know, she asks questions every now and then, but some of the accounts she doesn't even log into. So
so there.
If this was like a blind trust,
it'd be easy.
It'd be a lot easier, but it's not. We've got mom whose she's at a stage of life that's not exactly that much fun. She lost her husband 2 years ago. Now she had to sell her house. She's living with her daughter. And
she was married to a man that was apparently, based upon what we've known about him so far, was very, very conservative. He was a school teacher. He had all his money pretty much in fixed investments and life insurance policies. My assumption was that life insurance probably was probably a pension max would have been my guess, which was
someone told your father to not take a survivor benefit on the pension and instead get life insurance.
So I think I would actually move to
it. Rarely works.
I would push towards a 30 to 40% allocation in equities. Scott, would you even bother?
I wouldn't bother.
Just because you're like, she has enough money now. She has enough money to live forever. It's going to generate that $40,000 a year. She's got 6 kids that love and care for her. If she comes up short, I'm sure they could scratch around and the emotional turmoil that it could cause. You just don't think that it's worth it.
I'm just thinking about. I'm thinking if I were Derrick. I mean, I've got 3 siblings, and my mom's 86. My stepdad's still alive and quite healthy, and she's reasonably healthy. And I think about my own situation. Like all of my siblings were all in different places financially and whatnot. They look at me a little differently because I've been in this wealth management space forever. But I'd still probably just say, let's just take a conservative approach because what do we have to gain versus what do we have to lose? Because we could run the numbers and say, let's keep this in very conservative investments, and there's going to be enough money to take care of mom the rest of her life.
Yeah.
Right.
But imagine going back to your mom and her asking one day, even if we did a 30% equity and the markets are down 30% of 30%, right? She's now down $100,000.
$100,000.
And she says, what happened? I had $1 million, 6 months ago, and now I have 900,000. And I don't know if I'd want to have that conversation with her explaining, the long term, especially with an 87-year-old, because she might be thinking, I'm not even buying green bananas, right? I mean.
Right. Yeah.
So I think I would err on the conservative side.
And if the Feds continue to cut rates, like some believe they will, the market's kind of pricing that in a bit, that the interest is going to get lower. What you don't want to do is, if interest rates go down, then suddenly when interest rates are down, say, well, now we have to go chase yield somewhere else, because that's a risky approach.
So what would you buy, Scott? CDs?
I think I'd probably keep it in CDs and maybe some treasury bills, but they pay about the same.
They do.
And probably ladder a CD portfolio.
Yeah. And if it's in the trust, by the way, if it's in the trust, you have FDIC insurance for that. It's up to $1 million if it's in the trust.
I mean, you can make an argument she can probably get a little bit better yield, maybe some other fixed income products. But they're all subject to, they're either subject to pricing swings. Well, they're all subject to pricing swings. So they've got pricing swings. But then some of them could have some sort of lockups in them as well, which she doesn't need. I don't.
So, and by the way, let me clarify that FDIC. It's the owner times the number of beneficiaries, not to exceed 4 beneficiaries.
Yeah.
So for her, it would be $1 million. So you could put it in one institution and not worry about the FDIC, as long as it's in the name of the trust. But I like the idea. Just the little we've heard about it so far. I think the advice we gave you when you called in a couple of years ago was excellent.
Well, in retrospect, we could have said, let's put it on the S&P 500.
Well, of course we could.
Or the Magnificent Seven. Or NVIDIA.
We would have been.
Or combination of NVIDIA and Bitcoin.
We would have been. You would have been. But we've got to remember whose money it is.
And all the emotional. There's enough money for mom to live the rest of her life. You could put it in a Folgers coffee can and bury it in the backyard and take money out as needed. There's going to be enough money. Because her expenses are almost nothing.
Yeah, and you don't.
And maybe she pays some rent to your sister.
And the mere fact that she's asking about it, if she would certainly, if it was in equity, she would pay a lot more attention to the stock market, which would create maybe some angst that isn't worth it.
Maybe. You mean like when she's watching the nightly news and the stock market tanks, and then they interview someone who talks about it's going to go to zero, and
then she calls Derrick and says, "How's my account?" That
right?
Is that what you're talking about?
Yes.
That would likely happen. Yeah.
Yeah.
We've seen it.
Of course.
We've seen people that tell us they like risk until it happens. So, and risk is always there.
Had your mother, you said, no, she's got a broker or she's got these stocks that she's had forever. It'd be a little different because then she's someone who's used to having things go down in value. Lived experience is different than just having an education from reading a book or watching a webinar, right? I mean, it's different. So I'd be conservative.
Yeah, appreciate the call.
Yeah, appreciate it, Eric.
Perfect. Yeah, thank you very much.
Sure. Scott, that kind of reminds me, which is when you see these stock picking contests, like my son was, I was with three of my children the last couple of weeks on vacation, and my third child, who has a degree in economics, it's great talking to him about different things, and he was talking about how he was in a stock picking club, and now he invests his own money, and he says, Dad, it's a lot different than when we were just picking things. And I said, well, to explain the difference. He said, well, look, he goes there, you got no glory if you're number one. So we just took flyers on everything. Either we were going to win.
It didn't matter.
Yeah. He said either we were going to win or we were going to lose. And he said we were out of the running in about a week.
I remember this was in the late 90s.
Oh, in the B?
Yeah, the Sacramento Bee. I was in the stock picking contest. They called me, and I'm thinking, I didn't want to do it, but I'm like, what's the old saying? The only bad publicity is no publicity, or whatever it is. So
that's just a saying, by the way.
But I remember thinking, it's a 12-month period. You might as well get a dartboard. And I picked whatever the stocks I picked. And the third quarter, I was number one there's like 4 or 5 of us. And they had a big piece in it with my photo.
Oh, really?
And at the end of the year, I don't know if I was number 2 or 3. I certainly wasn't the top.
You weren't allowed to trade in the portfolio, or were you?
I don't remember.
Oh, okay.
I just remember the time, but I did not win. But it was a small story, kind of buried in the back. So
you were like, "Oh, okay."
I had people afterwards tell me how I crushed that stock picking competition.
Yeah. So when we ask these questions about the emotion, people are, why are they spending so much time on the emotion?
It's all the emotion.
That's what drives decision making. That's why people get married. That's why people have kids. That's why people get divorced.
We do a lot of things that aren't good for us financially.
Yeah, they're completely...
Having kids, not great financially.
Yeah, completely at times irrational.
Right. We go out to dinner.
Yes.
Have someone else cook for us.
Yes.
And do the dishes for us.
Yes.
Obviously, it costs us something to do that.
So, anyway. Right. But while I'm on this subject of my son, we were talking about digital currencies. And he pointed something out to me. And by the way, so I was overseas and we were paying an exchange rate. And I thought this really kind of makes sense for a digital stable currency because you get rid of a lot of that exchange rate risk. But he said he had played some Bitcoin and he had done it earlier. He said, I don't understand how a currency, you could call something that moves around that volatile. Currency. Yeah. So isn't the role of a currency to be relatively stable? Like if you had a country and you had a currency that had 30% swings over a 12-month period,
it would be your economy would be a wreck.
It'd be catastrophic. But a stable, something that is pegged to an underlying index, kind of makes sense for international trade, especially if you're doing it illegally.
Especially then. That's right. No one to track it.